and doing well and staying safe. We're going to continue our weekly discussion here on real estate, interest, and inflation being the biggest piece this past week. We had the Bank or Statistics Canada release their print, which is inflation year over year. And as you can see on the screen, inflation in Canada slows in July, but rising 7.6% from last year. And it came definitely less than what was expected. And I'll take you through what this means on where those increases are. Obviously, what we're seeing in the market for homes, why driven by inflation. Also, what's going on in terms of the numbers and activity we're seeing in real estate across Canada, the GTA, and Vancouver, particularly in focus. And I'll definitely take you through the statistics and also what the Bank of Canada has said and where we're actually seeing some activities of buyers purchasing home in current environment. Obviously, sales are always going to continue. It's just, activity has decreased. So I hope you appreciate me coming at me. All the descriptions of these or all the articles will be in the description below. Any comments, guys, any questions for me, I'll have my Twitter and Instagram handle below. I am a wealth management advisor. I do this day in, day out. I spend time with my clients and obviously spend a lot of time researching. So if you're looking for trusted advice, I always say reach out to your advisor and someone you can work with. So let's kick it off here. So inflation is the biggest thing driving interest rates going up, and this print meant was very important in terms of what Bank of Canada is going to do on its next decision on September 7th. So as mentioned, inflation definitely slowed down in July at 7.6%. In June, it was 8.1%. And that was largely the decrease we've seen is slowdown in gas prices. But gas prices are still up 35.6% annually in July. But when you take out gas prices, you can see in July this inflation still increased or prices by 6.6% year over year, and that was ahead of the 6.5% annually increase we've seen in June. While gasoline prices have declined on a monthly basis for July, prices for other goods such as natural gas and groceries rose, and this is Statistics Canada's data released on Tuesday, August the 15th or 16th, I should say. Adding that price increases for travel-related services, including flights, restaurant meals, and hotels also increased. So if you've been traveling, you most likely probably experienced that as well. I know I definitely seen it at the grocery store. And here we can see the data. Food prices jumped in July 9.2% annually, and this is from June. It's up 0.9%. So at the grocery store, the prices we've seen increase is definitely for bakery goods. So 13.6%, dairy up 8.9%. Fresh vegetables up 8.8%, and meat coming in at 6.1%. And definitely other items such as eggs, coffee, tea, fresh fruit, preserved fruit, and food preparations also going up in prices. Along with food, shelter has definitely gone up. So shelter costs were up 7% annually in July, and rent also increased 4.9% year over year across the country, with Prince Edward Island with the biggest jump there. So we're definitely seeing inflation being sticky, and this is going to be the key driver of Bank of Canada's decision and policy moving forward, and definitely next month on September 7th. And this has a big effect on the housing market. As I'll take you through the numbers. Just briefly here, this was an article that came out this week on Monday, August the 15th. So Ontario home buyers stunned by an extra 175,000 charge from developers. So these individuals bought a pre-construction homes, in Strainer, Ontario. This was the builder Aston Meadows Development, so 125,000 or 125 clicks north of here from Toronto. And essentially, they're saying due to inflation, supply chain, and obviously the labor and material shortage and price increases from COVID-19, they got to charge you $175,000 to complete this project and give you your home. If you don't, they can sign, you'll get your deposit back, and they'll move forward with trying to sell it to someone else. So this is a direct result of inflation, and obviously what we've been seeing with COVID-19 in terms of labor shortages, supply shortages, pretty much it seems like everything. And this really affects the housing market in terms of inflation and interest rates. As you can see here from Financial Post on August 16th, from RBC, bottom still a ways off for Canada's housing market. And there, just some data they shared. Home sales dropped 5.3% in July, and that's the 5th month of declines in terms of what we've seen in the last little bit. And benchmark prices dropped 1.7% from the month before. Those are national prices in Canada. Since March, when the Bank of Canada began hiking interest rates to battle decades high inflation, home sales have fallen 31%, and benchmark prices almost 6% nationwide. And this is according to RBC Assistant Chief Economist Robert Hoke. In his opinion, the bottom is likely many months away as the central bank continues to do what they need to do to battle inflation. We saw a 100-point increase from Bank of Canada in July, and in Hoke's perspective, that threw ice water on the market. as obviously it disqualified more buyers, shrank the mortgage they can get, and obviously put more people on the sidelines. And those, those mortgage costs are expected to continue to increase. So potential buyers are holding back in case prices drop further as well, while sellers are debating whether they should wait until the market returns in their favor or they should sell now. So new listings have, though, declined 5.3% between June and July, with the months of inventory rising from 3.1 to 3.4. But that's the highest we've seen in 2 years. So we've definitely seen price decreases, sales decreases, and I'll definitely take you through what those numbers are a little bit further in detail here. Canadian real estate sales dropped for the 5th consecutive month. This is an article from August the 15th. So this is from CREA. The Canadian Real Estate Association said on Monday that national home prices fell 29.3% compared to last year. Sales were down 5.3% from June, marking the 5th straight month of declines, as shared below, or shared before. CREA says sales were down in about 3/4 of the local markets, led by the Greater Toronto Area, Greater Vancouver, and the Fraser Valley, Calgary, and Edmonton. So obviously where we've seen prices increase the most, we've seen definitely larger decreases there in prices. So home prices continue to drop, as mentioned before. The average home falling 5% compared to last July, and that's coming in at $629,000. Again, that's national home prices across Canada. That number is very important to remember. Obviously, what's happening in your particular region, your local area, those prices decreases are going to be different. So July saw a continuation of the trends we've been watching unfold for a few months now, sales winding down and prices easing in relatively more expensive parts of the country, as well as places where prices rose the most in the past 2 years. From CREA Chair Jill here in the statement. That said, the demand that was so strong a few months ago has gone away, but some buyers will likely stay on the sidelines until they see what happens with borrowing costs and prices. As they re-enter the market, they'll find a bit more selection, but not as much as they might have expected. Because I'll take you before that as well. What sellers have done is taken many homes off the market. They're not getting the price they're looking for, and obviously they'll try to rent, as we've seen rental prices have definitely gone up, or they'll figure out something else until they get the price that they're looking to get. And talking about interest rates, a bit here from the Bank of Canada, Chief Tim McElham, that he says, job not done despite the cooler inflation. McElham delivered the hawkish message in a newspaper this past Tuesday after the CPI number came in at 7.6% yearly. McElham's comments and the sticky inflation reading firmed a conviction among traders. This was overnight swaps with the Bank of Canada that will hike by as much as 75 basis points on September 7th to rein in price pressures. So again, September 7th is the next decision by Bank of Canada. Expect 0.5 to 0.7% increase in the overnight rate, and that's definitely going to take mortgage rates up in terms of variable, and we'll see how fixed rates continue down upward trend or stay steady as they have for the last couple of weeks here, around 5%. So take you to another perspective. We are seeing, as mentioned, some buyers obviously buying in this market. So this is from the Financial Post from Thursday, August the 18th. Softer values for detached homes bringing back buyers in this market. So this is from REMAX. This is a report they put out. It said the report compared market activity in the first and second quarter of 2022, and they were looking at unit sales and prices. And where they looked at this data was from 60 Toronto Regional Real Estate Boards, so TREB, 16 regions in the Real Estate Board of Greater Vancouver, 6 areas in Fraser Valley, and REMAX found an increase in second quarter home sales across 40% of the Greater Toronto neighborhoods, 31% in Greater Vancouver, and they're comparing this to Q1 of 2022. And in the city of Toronto, the benchmark price for a detached home was almost 2.1 million in February. In July, it fell to 1.5, and this is according to TREB again. Meanwhile, the benchmark price for condominiums in Toronto came about 738,000 in July, and that's down from March of 840,000. So this is also from REMAX. Alton Ash, their executive vice president. Buyers shouldn't expect big bargains. Sales to active listings remain squarely in balanced territory overall, and even tight in some areas, again, regionally. In Vancouver, for example, supply was lower this June than last in 50% of the markets, and sales were down accordingly. Despite the softening in housing markets overall, active detached housing listings in June were running almost 19% below the 10-year average in the GTA, approximately 12% below the 10-year average in the GVA, and close to 9% below the 10-year average in Fraser Valley. So the decline in listings comes at a time when also builders are pulling out developments and saying we're not going to put them out this time due to softer demand. while the impact of those decisions will not be felt immediately, we'll definitely see this across, definitely down the road in terms of what that means. Guys, I hope you appreciate this video. Just to summarize, inflation is definitely sticky. It definitely didn't come out what was expected, but it's still a big number, and they need to get to 2%, which is the objective of Bank of Canada. The next decision rate for interest rates is September 7th. Definitely expected to increase, and what that means for your prime rate, variable products in terms of mortgages, and obviously we'll see what happens with fixed mortgages. And also, we're also see some activity in the market. Housing sales are definitely still happening. They definitely slowed down from last year in 2021 in terms of being an outlier in terms of number of sales. So, if you're looking to buy or sell, I hope this information was helpful for you. So guys, any comments, any likes will be much appreciated. A subscription will definitely keep me motivated to keep going. Any questions for me, my Twitter and Instagram handle are below in the description. Please reach out with any questions. Love to have a discussion. So I hope you do well, stay safe, and we'll talk again soon. Thank you for your time.